Each cycle, depicted in different colors, demonstrates Bitcoin's historical trend of significant price increases. The orange line represents the genesis to 2011 bull market. The pink line covers 2011 to 2013. The blue line shows the 2015 to 2017 period, and the green line represents the 2018 to 2021 bull market. The black line indicates the ongoing bull cycle that began in November 2022. Although it's less pronounced, it has still achieved a substantial rise, quadrupling the prices from the lows with quite a bit of room left to run. When you measure these cycles based on the start of each halving cycle, you get a different picture. The first halving, orange line, occurred on July 10, 2010, resulting in a price surge of over 1,000% within the first 12 months. The second halving, red line, led to a 200% price increase in the subsequent year. The third halving, blue line, saw prices jump more than 600% in the first year. The ongoing fourth halving cycle, green line, indicates continuing growth, maintaining the trend of significant post-halving price appreciation. Throughout this video, we will look into a variety of charts and data that show the current Bitcoin cycle compared to cycles of the past. We will start with something we have not seen in past Bitcoin cycles: ETF adoption. This chart provides the latest available balances of the top 10 US-traded Bitcoin ETFs, typically reflecting the asset holdings at the close of the previous trading day. As of March 31st, 2024, spot Bitcoin ETFs have accumulated nearly $60 billion in assets. Spot ETFs have emerged as a major driver of new demand for Bitcoin, while all new supply remains constrained to miners' rewards. To analyze the impact of ETF demand on the market, this chart shows ETF inflows with the new Bitcoin supply. In the 2.5 months since the launch of spot ETFs, ETF demand has substantially exceeded new issuance, with the upcoming Bitcoin halving in mid-April set to reduce miners' rewards by 50%. Monitoring the supply-demand imbalance will become increasingly crucial. We can now see the comparison between the volume of spot Bitcoin traded on centralized exchanges and the volume of spot BTC ETFs. ETFs contribute significantly to the total spot volume, with overall spot trading reaching some of its highest levels on record since the introduction of ETFs. This trend highlights that these new financial products are enhancing trading activity and boosting market liquidity. To measure Bitcoin's available supply, we subtract the illiquid portion, those in lost wallets, long-term holdings, or otherwise locked up, from the current circulating supply of 19.68 million BTC. As shown in the chart, the available supply peaked at 5.3 million BTC in early 2020 and has since decreased to around 4.6 million BTC. This decline represents a significant shift as we enter the fourth halving, contrasting with the previous trend of steadily increasing available supply observed during the earlier halvings. The price of Bitcoin increased 69% in the first quarter, sparked by record-setting demand from spot ETFs that brought new investors into the crypto economy. You can track Bitcoin and other cryptocurrencies in real time without having to monitor a computer screen with our app Stock Alarm. Stock Alarm allows you to create custom alerts such as push notifications, texts, or calls on a variety of market triggers like price limits, price changes, moving averages, recurring price alerts, trailing stop losses, volume spikes, 52-week highs, and earnings. Over the past decade, Bitcoin has achieved positive annual returns in 7 out of 10 years, with particularly notable gains in 2017, 1,296%, and 2020, 305%. Despite facing average intra-year declines of 47%, Bitcoin's long-term performance underscores its potential for substantial gains. The Fear and Greed Index, represented here through the Net Unrealized Profit and Loss (NUPL) metric, gauges investor sentiment by assessing unrealized profits and losses within the Bitcoin supply. This metric identifies emotional states from capitulation, fear, to euphoria, providing insights into market psychology. The chart demonstrates periods of extreme sentiment fluctuations. Significant drops into capitulation territory, red, occurred during market crashes in 2011, 2014, 2018, and 2020, reflecting high levels of fear and losses. Conversely, peaks in the euphoria and greed zones, blue, coincided with major bull runs in 2013, 2017, and late 2020 to 2021, indicating high profits and optimistic sentiment. The current sentiment remains optimistic, green, suggesting ongoing positive market sentiment despite the recent volatility. The circulating supply of a cryptocurrency is divided into supply and loss, coins with a cost basis higher than the current spot price, and supply and profit, coins with a cost basis lower than the current spot price. Analyzing supply profitability can illuminate the current market cycle, which typically follows three phases. Bottom discovery, which occurs in the final stage of a bear market when extended price drops increase the share of supply in loss to over 55%. Euphoria, characterized by a parabolic price rise during a bull market, where over 95% of the supply is in profit. In a bull-bear transition where supply profitability is balanced, with 55%, 95% of the supply in profit. Notably, Bitcoin has entered a phase of euphoria around the start of the 2024 year. Active addresses represent the number of unique addresses that were active on the network as senders or receivers. This metric is crucial for gauging user adoption, network health, and economic activity. The chart indicates that the average daily address count decreased by 11% in the first quarter. To provide a more precise picture, the number of active entities is also considered, as a single entity can control multiple addresses. Active entities are clusters of addresses managed by the same network entity, identified using advanced heuristics and Glassnode's proprietary clustering algorithms. Notably, the average daily entity count increased by 16% in the first quarter, highlighting a rise in distinct active participants despite the decrease in active addresses. Long-term holders, LTHs, are investors who retain their cryptocurrency for at least 155 days, a duration historically associated with a decreased likelihood of these assets being sold. The activity patterns of LTHs can serve as a barometer for identifying cyclical trends in cryptocurrency markets, including potential peaks and troughs. The chart indicates that in the first quarter, the supply held by LTHs dipped below the long-term trend, partly due to dynamics in the ETF market. This decline is notable as it diverges from the generally upward trend observed since 2020, suggesting a shift in long-term holding behavior amidst changing market conditions. BTC annualized 3-month volatility climbed 35% in the first quarter as Bitcoin hit a new all-time high and then pulled back. However, since 2020, volatility has significantly decreased as cryptocurrency has matured and institutional participation has increased. This trend indicates a stabilization in Bitcoin's market behavior over time. And finally, we would like to thank the Coinbase institutional team for the hard work behind this research and analysis. You can find links to both Stock Alarm and Coinbase at the links in the description.